What I'm showing you now at this point in time is the public account. Okay, these are all the positions in it. Meta's the big dog position is 31% weighting of the portfolio. AMD's the next biggest down, about 12% weighting. And then we go 8% with Amazon. Celsius, it is now 5.6% of the portfolio. Nike's at 5.2%. Cake is at 5.2%. That's actually crazy. We're both at 5.22. Palantir's at 4.6%. Estee Lauder's at 4.2%. PayPal's at about 3.5% here. We have the nice cash position of 3% there, right? And then we have Elf at a 3% position. SoFi's at about a 3% position. Adobe's at 2.6%. Google's at 2.2%. Fubo is at 1.8%. Honest is at 1.2%. And we have Revolve and The Planet both a little over 1% each, okay? So, portfolio as far as amounts, we're up right now over $2 million. That does not account for all the profits I take in this year and in past years. This year alone already booked $613,000 in profits. Call me tax man, okay? Alrighty, so here's the deal. Here's what I'm thinking about for my next big moves, okay? If we look at Meta's a natural stock that I should want to sell shares of. Why? Because the percentage, it's such a massive position in the portfolio. I mean, look at a day like today. A day like today is a perfect example. This portfolio should be over $4 million here today. But what held it back? Right there. It was Meta. So if Meta stock goes wrong, let's say in the next year, 2 years or whatever, it could hurt the portfolio tremendously. I mean, it's just the way it is. It's 31% weighting in the portfolio, right? So the rest of the portfolio could be doing tremendous. But I mean, if Meta got hit, ugh. Now, here's my issue with Meta, right? We know it's got a great business model. We know Zuckerberg's a beast. We know the company's income statement, balance sheet, cash flows are top tier. And we know they're spending aggressively for the AI future. But here's why it's tough for me to sell Meta. Look at the forward P in the stock. It's 27. It's 27. Like for a company that last quarter, didn't they just grow their revenues 20% plus? Didn't they just grow net income I think it was like 38% or some crazy number like that last quarter? And the forward P is in the 20s? How in the world am I going to sell Meta? Like that's a tough sell. That's a tough sell, man. I mean, let's run some projections on Meta. I don't think I have Meta projections saved here in my saved files. Nope, I don't have any Meta projections saved at this point in time. So let's just play around with some just rough numbers for a base case around Meta, okay? So let's say Meta grows revenues. You know, they've been growing revenues 20% plus. So let's just say a base case is like 15% per year, okay? Not something that's crazy. They're going to have Threads monetization coming in the next few years. That is basically an untapped opportunity. The WhatsApp opportunity is massive. Facebook and Instagram continue to grow. They continue to grow ad spend there, right? And let's say they grow net income here at about a 20% clip for this company. 15% top line, 20% bottom line. You're easily commanding, I would say, a 27 P ratio, which is, in my opinion, low for that sort of growth rate, but we'll plug it in, to a 32, right? This is very fair, conservative case here. I'm still getting a CAGR. Even if I was buying Meta today, I'm still getting a CAGR of 20% plus over the coming years. That's a tough stock to sell. If ever I can run a base case on a company and I run them in the CAGR's a 20% plus clip, dude, how am I going to sell that stock? And so I look at Meta and I'm like, if this stock was priced at $1,100 or $1,200 today, I would feel different. I would be like, you know what? The CAGR is much lower because if the stock was valued there, the CAGR would be significantly lower than 20-something%, right? If it was $1,100, $1,200 stock here today. So it'd be much easier for me to say, you know what? Let's go ahead. Let's cash some shares of Meta, right? But in the 700s, it's near impossible, right? AMD's just started a multi-year move, so I'm in no rush to get out of those 2,555 shares there, right? Amazon's one of those stocks, it's almost impossible to sell that stock, especially given that it's less than 10% weighting in the portfolio. Like Amazon just has growth as far as I can see, like e-commerce, AWS, advertising, like it's unbelievable, right? Celsius, once that one goes over 100, that's probably the moment I start to consider maybe cashing some shares here and there, right? But they have a diversified business. They're a giant now in the energy drink industry between them and Alani. Once it goes over 100, we can talk. But for now, I'm still not interested in selling. It's 56, right? Nike's at the first innings of a turnaround, so I'm not even, or we can call it the second inning of a turnaround, so I'm not even remotely interested in selling Nike anytime soon. Cheesecake's got growth for the next decade plus, so I'm not interested in selling cheesecake, and the valuation on cheesecake is still so compelling. Like, we're talking about a company in cheesecake, right, that has growth in North Italia and the flower child concept plus the other concepts for as long as we can think, and the forward P's under 20. Come on, man. Like, I can't sell cake anytime soon. Plus, that one pays me sweet, fatty dividends every 3 months. It's beautiful to just sit back and collect those dividends, and then I get to go buy more cake shares and more of shares of other stocks, right? Palantir, Palantir is one I've lightened up on significantly over the last number of months. My plan is not to lighten up on the position anymore. I want to hold this other 1,000 shares just for the long term, just in case I'm wrong and Palantir becomes a trillion-dollar, multi-trillion-dollar company. I think the odds of that are lower as far as at least in the next 5 years. So I think Palantir is going to have, my opinion is Palantir stock's going to see, basically if we fast forward, let me put it like this. If we fast forward as 5 years in the future, I think Palantir is going to be around the stock price it is now or lower. That's my opinion, but I'm going to hold 1,000 shares just in case, because who knows? Like, maybe Palantir revenue growth goes 50, 60, 70%, right? I have my doubts about that. But what if it happens? I want to still have some skin in the game. The company's done nothing but execute on the highest level the past 3 years. So, I'll hold that 1,000 shares and we'll see what happens there, right? Estee Lauder, and I've already taken so many profits from Palantir, it's insane. Now, Estee Lauder, that one's still beginning, like inning 2 of the turnaround play, kind of like Nike, so I'm not interested in selling that one anytime soon. PayPal, I already lightened up on the PayPal position, right? But at the end of the day, like, PayPal's just a really solid company. It's just a boring company, right? Puts everybody to sleep. Elf, growth for days. Like, I got to hold that 1,000 shares of Elf as tightly as I can because the road acquisition going through, oh my gosh. I wish I had actually more shares of Elf in this portfolio. I do have a lot of Elf shares in other portfolios as well, so do keep that in mind. But in this portfolio, I kind of do wish I had more than 1,000 shares. SoFi, oh my gosh. Anthony Noto's just been executing on such a high level with that company. It's a lower position size for me. It's less than 3% of the portfolio. So there's really no incentive for me to cash SoFi. I got a company that's so forward looking, right? Anthony Noto operating this company on the highest level of anybody in fintech or banking related, right? I don't think there's anybody that's executing at a higher level than Anthony Noto right now in the entire space. And it's less than 3% of the portfolio. How can I part with SoFi right now, right? If the stock was 50, 60, I might feel differently. But at 23, I'm like, I'm good. That's fine. Roll, baby, roll. Roll Tide. Adobe, this is kind of a newer position for me. Like, we'll have a day when we might sell Adobe, but that's a long time from now, likely, okay? Unless I see fundamentally, big deterioration in the business model, which I don't think is going to happen, I'll continue to hold Adobe for quite some time. Google, very similar to Adobe, hated stock, but at the end of the day, this is a performer. You can't, Google's just an animal, okay? Like, you got so many different great businesses inside of Google, it's ridiculous. Fubo, we're still waiting on the Disney deal to go through. That should happen sooner rather than later, in my opinion, which is going to be a great thing for Fubo and its stock price. And the profitability of that company's gone so much better over the past couple of years here. Honest continues to execute on a high level. I listened to Honest conference call, walked away very encouraged, walked away very charged up. Honest is doing everything they got to do to execute the business model. I understand the position's not doing great for me. It's down 13%. I'm 0% worried about Honest. I think Honest is going to be a double-digit stock. It's going to be a $10 to $20 stock within the next 3 years. And so that's my opinion on that. So, what's the compounding annual growth rate if the stock goes to somewhere between $10 and $20 over the next 3 years? Now, you might say, okay, you think that, why not make it a bigger position? It's still, I don't want to say it's speculative, but it's still kind of, it's less of a sure thing than in some of these other stocks, in my opinion, right? It's just a smaller company in general. Revolve's management team's done a phenomenal job over the years. It's a 1% weighting. It's not significant to the portfolio. And the plan, it's a 1% weighting, right? If legalization happens there, you're going to see that stock boom. Next thing you know, we'll be talking about that stock being $1 or $2. And it will happen quick. But we'll see about legalization, the reclassification, all that game has to play out there, okay? Now, in regards to some stocks I've been thinking about adding to the portfolio, something like Snowflake's been coming to my mind a lot lately. I just am a little unsure of Snowflake at this point in time, and if I can become confident that Snowflake can grow 20% plus revenues for into the 2030s, I got to buy Snowflake. But I'm still trying to figure out if I'm confident in that. Because I'm confident in the short term they'll grow 20% plus revenues, but I'm like, am I confident 5 years from now I'll still be doing that? That's the part I'm still figuring out in regards to Snowflake. So I got more work to do there in regards to that one. TTD I've been looking at, but TTD, the thing that scares me is Amazon is serious competitor, and it looks like Amazon's going directly against them, and that's tough. That's tough. And the thing with TTD, it's not like it trades at a really low, like, oh my gosh, it's the cheapest stock in the world. Like, you look at TTD's valuation here, right? And you're looking at a forward P of 41. Now you say 2-year forward Ps might be in the 20s. True. But, we got to say 2 years from now, is Amazon taking massive market share from TTD? And if they do, what is TTD's revenue growth 2 years from now if Amazon really eats their lunch? I mean, could the company be growing revenues at that time only 5%, 10%? That's a possibility. That's what makes it scary, right? So I still got more work to do in regards to TTD. So there's some of these stocks I'm looking at that I'm just like, they're possible buys, but in terms of new additions to the portfolio, but I just have more work to do, man, on some of these companies to get confident enough to buy them. Like RH, I like RH, but I'm like, that's another one that as soon as we get another major market correction, RH is getting hit heavy, right? It's seeing a lot of momentum right now because there's hope around the housing market coming back, and maybe people are smart to play that one in the future, right? Bath and Body Works, I like that as a company, but they have a bad balance sheet at that company. At least in my opinion, the balance sheet's not very good. They got a lot of debt. So I don't like that. Whirlpool's interesting to me, right, on a bounce back of housing in 26, 27, 28. That should be a multi-year bounce back in home sales, which should benefit Whirlpool greatly. So Whirlpool's interesting. Do I want to add in Whirlpool position? I don't know. Hershey's is somewhat interesting. Wynn could be interesting to add to the public account, right? The thing with Wynn is the stock's just kind of always a dog, man. Like, at least in the last at least since 2020, like Wynn's just been a dog of a stock. Like the company is executing on a phenomenal level. Like you can't say anything bad about the company in the way they execute, right? But the stock just kind of like, the stock's just an ugly stock. That's the thing. Like Wynn is such a beautiful business, such a beautiful company, so well run, just a masterpiece of if I was to start a leisure company, a travel company, like I want to be like the Wynn. Like the Wynn is the creme de la creme, but man, like the stock just is one of those stocks that kind of sucks. But I really think over the past few years, the reason Wynn's stock has sucked is not because the business has sucked. The business is amazing, but because you're in a higher interest rate environment, right? Anything is, the bottom line is the past year or two, actually the past 2.5 years, we've been in a higher interest rate environment than we had really the past 15 plus years. So people like, I don't want to own something interest rate sensitive in a market where, people are like, interest rates are higher. So that's the bottom line in regards to that. Okay. Now, how to run a portfolio properly. And by the way, in regards to public account, like what I'm going to likely do in the short term, meaning the next month or two, I'm going to likely continue to add some core positions in here. Like I could see me buying more Adobe in this portfolio, right? I could see me buying some more Cake or Nike here and there in the portfolio. I could see myself even buying some more Amazon here or there in the portfolio. I could see myself buying some more Honest here or there in the portfolio, right? The plan is kind of tempting with the potential reclassification. I just don't know how much I can trust Trump to actually get it done. So I don't know. We'll see. Hey, it's Jeremy. I hope you really enjoyed that clip here today. What you looking at in front of you right there? That's the 6-figure Hall of Fame. Do you want to see the next one? That's the 7-figure Hall of Fame. Now, that is my private group. Those are members of my private group that have scaled to 6 figures, multi-6 figures, 7 figures, multi-7 figures in their stock market portfolio. They say you are the average of the 5 people you associate with. If you're somebody that is having trouble finding other long-term investors that are focused on building their wealth over the coming years, finding like-minded folks, look no further than my private group. We got a tremendous amount of people. We're consistently talking with each other, learning from each other, researching companies together, sharing news about our different companies, right? We do all that inside my private group. If you would like to apply to join us in there, go down in the description area. There'll be an application down there. You can click on that and you can apply to join us in there and take your game up to a much higher level and associate with the type of folks that you actually want to associate with. Alrighty, so let's start talking about these stocks right off the bat. Planet, Elf, Celsius, massive moves here. Okay, by the way, Planet. Okay, let me just talk about that one first. Listen, Trump came out and he's talking about reclassifying MJ, right? Listen, let's first hope that happens, all right? Secondly, if it does happen, it's huge for the whole industry. It's not just huge for Planet stock. It's huge for all those stocks which have been just the worst. I mean, all these MJ stocks have just been trashed for years. It's not like they've been trashed. No, they've been trashed for years. All these stocks, the Planet, every single one of them, right? A lot of the MJ companies went bankrupt. And there's the ones that are still hanging around, there's so few, right? And Planet's one of those. Only the very strongest of the stronger really left at this point in time. The ones that got the good cash balances that have somewhat of a decent business model. But here's the deal. If the reclassification happens, it can be a huge positive and boom for the industry. And so that's why it's not an accident that Planet stock was up 45% here today. And the more momentum where people start to think like, oh, Trump's going to actually reclassify this, you'll see more momentum in stocks like Planet and other stocks in MJ space where they'll keep moving. And then if the reclassification actually comes, those stocks will keep moving. So it could just be a lot of momentum, for the next month, but we'll see, right? You can't get too excited about these things. I'm hopeful it happens. I've always been somebody that looks at this and I'm like, if alcohol's legal, like MJ should be legal as well, for anybody over the age of 21. That's always been my opinion, right? So we'll see what happens. But that's what's going on with the Planet, right? Now, in regards to ELF stock, right? I told you guys, I think it was the last video I recorded when I was in New York City, right? This video right here, 2 stocks set up for explosion. I told you guys, man, listen, ELF, I know people sold it off after the earnings, but I'm like, ELF's going to be bought right back up. This stock's set up in a phenomenal position, right? And here's the deal. Here's what comes out here today. ELF Beauty rises after Morgan Stanley upgrades to overweight rating. Makeup company ELF Beauty shares are up about 10%. Morgan Stanley upgrades ELF to an overweight from equal weight rating, right? They want you to be overweight the stock. Brokerage expects ELF's 2027 adjusted EBITDA to be about 18% higher than consensus estimates. Ooh. Raises their price target to $134 from $114, which is 31.7% upside from the stock's last close. 14 to 16 brokerages rate the stock a buy. Or higher. 2 rate it a hold. The median price target for ELF is $135, right? Now, this comes on the back of a lot of bullish momentum from the Wall Streeters, from the analyst community, right? ELF Beauty is maintained at a buy by Canaccord Genuity. They did cut their price target to 128 from 150, which is, what happens when the stock price goes down, right? Because it was like $93 or whatever, a few days ago. ELF Beauty price target cut to 130 from 132, hardly a move, but JP Morgan maintained its overweight at JP Morgan, right? Big dog. Another big dog, Goldman Sachs. Goldman sucks. They maintained their buy rating as well on ELF, and they actually raised their price target to $137 from $120. Okay, listen, here's the deal with ELF. All these Wall Streeters are going to start loving ELF again. All the investors are going to start loving ELF again. You know why? It's about to become a growth beast again in 2026. And the reason being is the acquisition for Road will be going through, right? And so 2026 will be the first full year where the Road acquisition is going to be in there, which is going to just skyrocket growth rates for the company in 2026, right? Additionally, in my opinion, ELF's not going to have to deal with all this tariff drama that they're going to have to deal with in 2025, right? There's so many moving parts there, so much drama as far as all that situation goes. And additionally, in 2025, in 2026, they're going to have really easy comps because they're going to be comping against 2025 numbers where 2025 had really tough comps against 2024 numbers, okay? And the 2023 and 2023 stack it's a lot to try to comp against for this year. They don't have to worry about that next year because they'll be comping against these easy numbers in 2025. So Elf's about to turn into a massive growth beast again, right? Which is, how many exciting, super exciting stocks do you have out there that are really growth beast companies? It's not a lot. When you start talking about companies that are growing revenue 30% plus, and especially if you talk about companies that grow revenue 40, 50% plus, which is where Elf's going to likely be in 2026, how many companies do you really have in the stock market doing that? A very, very small amount. How many companies in the makeup industry? I can't think of anybody off the top of my head that will be growing revenue 30% plus next year. Never mind if we're talking 40, 50, or 60% growth rates, which is very much where Elf could be for growth rates in 2026. Between the road acquisition and then the easy comms, better business model, international expansion, the dollar raise on products, right, which will be a full year effect in 26. Like, oh my gosh. And so it's almost impossible to find that, which means everybody loves it. Investors love it. Wall Street loves it. Analysts love it. Investment banks love it. Everybody. Boom. Next thing you know, Elf's hitting new all-time highs, right? So the moral of the story is here, it's a very freak special company, right? And Elf is about to become one of the most exciting stocks again. It's already been, and it's about to happen again, right? And so it's just part of the game, man. Part of the game of the stock market. It's, the thing you got to understand about the stock market, I talk so much about valuation on the channel, right? I talk about projections, running numbers, things like that, right? And I do that so I don't mess up. And so I'm trying to do everything I can to create the highest probability of me being successful in an investment before I make that investment. That's why I run projections. That's why I'm trying to figure out if I'm paying a fair price, all those sorts of things, right? Because I'm trying to get the best ROI I possibly can. And I'm trying to limit downside risk and get as much upside potential as I can, right? That level of thinking about the market is just not the way a lot of investors are programmed. Not a lot of way hedge funds run. They run off momentum. They say, oh, that's the hot name. Oh, that's got the growth. Buy. It doesn't produce great results, by the way, over the long term. And that's why massive amounts of hedge funds underperform the market significantly, and funds in general underperform the stock market significantly, because that's not going to work. That's not good enough to get great results over a 5, 10, 20-year span, okay? But it's the way it is. And so you just got to understand, a lot of people invest with such a dumb mentality like that. So when Elf is going to be posting insane growth, they're going to be posting at the end of this year and going into next year, people are going to see that growth rates and they're going to say buy. And it doesn't matter what Elf's valuation is. They're going to say buy. The same thing happening with Palantir right now. One of my stocks, it's benefiting huge from this exact phenomenon. Palantir just posts revenue growth acceleration. No one's looking at the trailing 12-month PE right now and saying, is this actually a good buy for a long term? No one's looking at the forward PE and being like, you know what? Is this actually like going to be a positive ROI really on the next 5 years? No one's thinking about that. They're saying Palantir's got the momentum. Palantir's got the great growth rates. Buy. It produces horrible results over the long term, but people do it. Funds do it. And so, it's just, you got to understand that's part of the game. And so Elf is about to become one of the most exciting stocks again, because they're about to start posting crazy revenue growth rates again. And so everybody and their grandma is going to be like, buy, 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 buy. And that leads me to Celsius. Like, why is Celsius continuing to see a lot of momentum in the stock? I mean, another 4% here today. Wasn't the market down today? And another 4%? Why? Well, I'll tell you why. Celsius is back to being a growth beast again. Their revenue just went to $739 million from $401 million. The growth rates are going to be ridiculous for at least the next, I would say, year or two for Celsius, because they got the Elon acquisition going through. They're going to get their core business back on the right track as this year ticks on and then 26. And then they're going to come off very easy comps at the beginning of they're going to be having really easy comps over the next several quarters. Like the next 3 to 4 quarters are going to be such easy comps, it's ridiculous. So Celsius is back to being one of the most exciting stocks in the stock market because the growth rates are skyrocketing, right? And so when a company has insane growth, people say buy. It's as simple as that, man. And so, Celsius in the latest quarter was 80-something% revenue growth? Where else are you finding 80% revenue growth? Not many stocks are posting 80% revenue growth, right? And so, You got to understand for the next several quarters, Celsius is going to be reporting 60, 70, 80, 90, maybe even 100% growth rates. You're just not finding that other places. And then, 26 is not going to be just about revenue growth for Celsius, but then it's going to be about margin acceleration and profit acceleration. So Celsius is back to being one of the most exciting stocks in the market, and people say buy, right? We'll figure out the valuation later, right? And Celsius is still a good buy even in the 50s, right? Is it as good a buy as it was in the 20s a few months ago? No, but it's still a good buy here, right? And here's the deal. Would I be shocked if Celsius hit $100 plus in 2026 and hit a new all-time high? I think the old all-time high, I think, was like 96 or so. Listen, I would not be surprised at all. I would not be surprised at all. If this stock hit 100 plus and hit a new all-time high in 26, I wouldn't be shocked at all. Like when I just think about how much momentum's going to likely continue to come into the stock over the next, several quarters, it's not like it's just a one-time effect. Like this is going to be a lot of momentum coming in the stock for a while, right? And then we think about what the numbers are going to be looking like in 2026, right? The last time that the company hit an all-time high, that was back in, I think they hit an all-time high for Celsius in 2023. It might have been 2024, but I think it was 2023 Celsius last hit an all-time high, right? When they hit that $96 level. And the thing is with Celsius, if you look at what the numbers are likely going to be in 26 versus where the company was when they hit that last all-time high in like 2023 or whenever the stock was 96, the fundamentals of the business model are going to look way better in 2026 than when it hit an all-time high at 96. So if you think it can't go to 100 in 2026, I'm just telling you, like, it could easily go to 126, right? Am I going to play short-term call options in Celsius because I'm banking it's going to 100? No. Not worth my time and stress, and something goes wrong and the market has a black swan event and the whole market goes down and then my call options expire worthless. I don't care about that. I'm not going to play that game of trying to, let me get some more arbitrage here. But, if market stays okay, I wouldn't be shocked at all if ELF goes 100 plus in 2026 because the fundamentals are actually going to be looking way better in 26 in growth rates than it was when the stock hit an all-time high at 96, so don't be surprised, man. That's the way Wall Street operates. So, and I won't be mad about that because basically this will go from a $200,000 position in the public count to a $400 position. And I'm not honestly interested in selling Celsius, any more shares of Celsius under 100 in the public count. So if it goes over 100, it approaches like 120, 150, that might change my mind. And I might say, okay, let me start cashing some shares here and there. But until it gets to at least 100, I plan on just holding this 4,000 shares so we could go from a position in the public count that's $200,000 right now, a little over $200,000 to then over $400,000 position, right? Or somewhere around there roughly if it goes 100 plus. So, a lot of money to be made in the market all the time, okay?